What's up guys, Trader CJ. We've got numbers at 8:30, that's in 12 minutes time, with non-farm payrolls. Previously it's 353,000, forecast 195. So let's see what's the actual there. And then we got unemployment, Canada news as well, and unemployment in the US for February. 3.7% unemployment, forecast also 3.7%. So let's see how the market is doing at that time. Currently I'm watching the bonds here, ultra bonds here in the middle. This is the 10-year bond on the left hand side. Same market, ultra bond here. Currently trading at session highs on the bonds.
So in 10 minutes time now at the bottom of the hour, do get the headline event for the day and the week, which is the US employment situation for the month of February. Non-farm payrolls, forecast 200k on the prior 353k, with a range of 286k to 110k expected. Unemployment rate, forecast 3.7%, prior 3.7%, with a range of 3.8% to 3.6% expected. And average earnings year over year, forecast 4.3% on the prior 4.5%, with a range of 4.6% to 4.1% expected. For Canada, we also see their employment change, which is forecast at 20k from the prior 37.3k, range seen at 77.1k to 5k expected. And Canada's unemployment rate is forecast at 5.8% on the prior 5.7%. So for the US employment situation report, just looking at a note from JP Morgan, who expect non-farm payrolls increase 200k for the month of February, in line with the median forecasts, and they see the unemployment rate holding steady at 3.7%, which is also in line with medians. They do note that job growth was robust in the month of January. So JP Morgan believed that this strong January job growth could have been flattered by seasonal adjustments that anticipated steep job cuts before the seasonal adjustment, and this is one of the reasons why they expect job growth to slow significantly in this report relative to the last one. The increase in the jobless claims filings between the reference weeks for January and February reports is another reason why JP Morgan believed this. But even though JP Morgan believes that job growth will cool in February, they still see a number of signs that the labour market remains strong and still expect a solid amount of jobs to be added for the month. Filings for unemployment insurance generally have stayed low lately, and consumer responses about the availability of jobs have remained fairly upbeat. So we are now 5 minutes away from the bottom of the hour and the release of the US non-farm payrolls for the month of February. Forecast 200k, prior 353k, with a range of 286k to 110k expected. The unemployment rate forecast 3.7%, prior 3.7%, range of 3.8% to 3.6% expected. Average earnings year over year forecast of 4.3% from the prior 4.5%, with a range of 4.6% to 4.1% expected. For Canada, the employment change is forecast at 20k on the prior 37.3k, with a range of 77.1k to 5k expected. The unemployment rate forecast at 5.8% on the prior 5.7%, with a range of 5.4% to 4.9% expected. So for the US employment change reports, just looking at a note from Wells Fargo, you know that all eyes are on this number. They say that during January, non-farm payroll surprised to the upside and rose by 353,000 net new jobs. Unemployment holding steady at 3.7%. Average earnings came in on the hot side, jumping 0.6% for the month. So they note that was twice the rate expected by all the consensuses. So all told, a January sizzling employment report shows that the labour market, although cooling, is holding up remarkably well despite tighter monetary policy. Wells Fargo add that what's more, upward revisions to the prior month's data indicate a stronger pace of payrolls growth over the past few months than what was previously reported. So in Wells Fargo's view, the past 2 months of robust employment gains over 300k are not likely to be repeated for the month of February in this release. They also cite the initial jobless claims and continuing claims remaining low, yet on balance have ticked slightly higher in recent weeks. They say the rise in claims indicates the labour market may have lost a bit of momentum for the month of February. That said, Wells Fargo note that the pace of hiring still appears to be on solid ground and anticipate payrolls rose by 195,000 during February, which is slightly below the median forecast of 200k.
Listen up! The new Showmax is streaming for you. Now, whether you're a queen that slays...
One minute remaining. I'll lead with US non-farm payrolls.
Guys, I just want to point out, so you can see how thin the market is getting on I think most markets, like the bonds, the indices, and probably the stocks as well. So you can see how it's thinning out and spiking around. That's
Do you
why
want to
most
stay up
people
to
get
date with the
slippage.
latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
10 seconds. 275k, 275k, higher than forecast 200k. Unemployment rate at 3.9%, 3.9%. That's higher than forecast 3.7%. Average earnings year over year 4.3%, 4.3% as expected. Let's look into the markets here to seeing some strength in the dollar following that non-farm payrolls print. For Canada, employment change at 40.7k, 40.7k. It's higher than forecast 20k. And Canada's unemployment is at 5.8%, 5.8% as expected. The breakdown from the US, private payrolls at 223k, 223k. That's higher than forecast 165k. US average workweek hours at 34.3, 34.3 as expected. Average earnings month over month at 0.1%, 0.1%, lower than forecast 0.2%. US manufacturing payrolls are down 4k, that's minus 4k, lower than forecast 7k. Labour force participation 62.5%, 62.5%, lower than forecast 62.6%. Average earnings for Canada at 4.9%, 4.9%. So again, US unemployment rate come in much cooler than expected at 3.9% on the forecast at 3.7%, with non-farm payrolls slightly hotter at 275k on forecast of 200k. So looking to the market, seeing a general reversal from the initial reaction, S&P continuing its move towards the upside, with the dollar per the Dixie down 0.3% now. US short-term interest rate futures rising after the jobs number. So seeing that treasuries are resuming their rise, the 2 to 10 year yields to the day's lows now. Japanese yen rallying 1% to a session high following that as well. So we have posted both the US and Canadian employment reports for the month of February on the feed for anybody interested. So in non-farm payrolls, noting a downward revision to the prior, 229k on the prior revised, on the prior of 353k. Traders still see a June start to Fed rate cuts after the jobs report, with a 30% chance starting on May the 1st. Noting Eurozone government bond yields ticking lower after the US data, Germany's 10-year yield down 4.7 basis points.
What is interesting is because the 10-year is breaking highs here of the session, and the Ultra Bond is still going for those highs. I know it was
US
a bit
2-year
thinner.
Treasury yields fall to 4.411%. That's the lowest since February 7th.
So I think that's why I'm looking for longs, currently looking for longs in this Ultra Bonds, hopefully going for those highs. Depending on the 10-year, if it keeps on pushing higher, then but it's definitely, there was a bit of a spike here. But even before the news came out, so we're currently trading above that level. But the Ultra Bond is not. So there's definitely something, a discrepancy here.
Fed swaps fully price in a quarter point rate cut in June. So again, Fed swaps pricing in a quarter point rate cut for the month of June. And also ECB ESTR forwards pricing in 105 basis points of rate cuts for this year now, which is up from the 101 basis points before the data.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
So traders add to ECB and Bank of England rate cut bets following the US jobs data. So just a quick recap then, the US employment situation was mixed for the month of February, with the unemployment rate coming in higher than expected at 3.9% on estimates of 3.7%. However, non-farm payrolls did also come in higher than expected at 275k on estimates of 200k. There's a peer attention turned to the unemployment rate number this month around, as that was a larger deviation.
Order filled. Order filled.
Effective Fed fund rate unchanged at 5.33% for March the 7th.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
The World Trade Organization says the goods trade barometer slips to 100.6 versus 100.7. World Trade Organization adding that goods trade continues to signal weak upward momentum. US Acting Labour Secretary Sue says jobs data demonstrates a strong and steady continued growth. So seeing reports that Swiss and EU talks are likely to start this month, according to Switzerland.
Cadbury Easter treats with love. Over here, over there, under this, or that. There's so much fun to be had. Plus 100,000 Rand in prizes. Visit cadbury.co.za. T's and C's apply.